Welcome back to the Eric Krown Crypto channel. Today, a very special day as I'm joined by a longtime friend and longtime friend of this channel, Mr. FiboSwanny, of which you've probably seen him before. He has some really unique ideas on price action, and most importantly, he has a lot of experience. So, well, I'm loving that we're bringing you back on the channel on like a regular basis. And with that said, I would like to hand it off to you, Mr. Swanny, and kind of run us through what you're looking at. One of the major things of the last couple of videos that we've done together was that you're looking at kind of a timing for a potential low. And I'm kind of curious where we're at right now as we are heading into, well, the heart of December.
Awesome. Welcome. Thank you for having me again. It's always a pleasure to be on your show, and just to chat it up with you. It's always good to talk shop with people
Indeed.
that actually know what they're talking about, right?
Likewise. Likewise.
No. Thanks for having me on. No, it's been really from a trading standpoint, from a swing trading, with my method, it's been kind of boring, to be honest.
Right.
But I think the last time we talked, we were looking at that possible September, but it was really like a November, December possibility low. But
Yeah.
my target was 16.7, so I've already backed the truck up. So I'm 16.7 hit, and I got a lot of good buys in there. So I'm long there for the long term, but I haven't really hit any, short term trades, any swing trades because we're in this consolidation. But I'll show you that all in charts and everything. But a pleasure being here. Pleasure.
Absolutely, my friend.
All right,
so run us through. I'll throw your charts up on the screen here.
All right, cool. Yeah, I'm just going to start with some lower time frame at 4 hour, and then work our way up. And then I got a couple dollar charts to kind of show too.
Nice.
Let's start with the 4 hour here. And oh, look at that, we already got a little higher high. Let me move my fibs. There we go. Look at that. Boom. So that just
action, baby.
Yeah, that just moves my shallow fib level up to where it just shows support for the current bull zone. But if you're looking at my stuff, when it comes to the thresholds here, or the bullish and bear zones, we've been in this boring ass consolidation for a long time here. We were in the bear zone, came down, we hit 16.7, which was one of my targets from a long time ago. So I was waiting to buy in there. I've bought all around in here. But right now it's kind of in this consolidation with 16.7 being a pretty good level to kind of wrap around, which I'm happy with. That was the first thing that I wanted to see, was a kind of a consolidation around that number. But what happened was we went into the bull zone right here on my threshold. But one of the rules on my threshold is once this went into a zone, the previous shallow fib at 17.5. I'd like to see 3 consecutive 4 hour candles once a threshold hits, and of course we've never went above it yet. So my swing trading really hasn't signaled to do anything in the near term. So until we get above this 17.5 or so and settle 3 settles above this, that would be my buy signal. Because now that we're back into the bull zone, but still consolidating, that's what I'm kind of waiting for, to give me that signal that we can kind of break out. I mean, I call this liminal space. I don't know if I've used that term on here before.
No, I haven't heard that one before, but that actually makes a lot of sense.
Yeah, I call it that because liminal means threshold. It's like, and I'm always looking about breaking a threshold one way or the other. And in this case, we got this range that we're in, 15.4 to 17.5, according to my stuff here on this shallow fib, because the start of my threshold was back here. So to me, liminal spaces, I don't really give a shit until it breaks one way or the other, because I've already kind of done what I wanted. So I'm kind of waiting for it to break out of this range. So liminal space to me is that threshold. And to be honest, that's where the emotions run the highest. Because when you're trying to jump from one threshold to the next, that's where all the emotions and that anticipation, anxiety, everything just pops up. And a lot of times you tend to make bad decisions when your emotions start to ride. So that's why I kind of created this, to give me that system or that rule to wait for, so I don't have to be so emotional about what's going on with,
So just to put that into other words really quickly, your liminal spaces is essentially like a trendless consolidation. Is that about right?
Typically, yes. when it gets into a consolidation range within my system of when it's in a bull zone, but it's still not kicking.
Right.
And it was weird because we went into a bull zone and the ADX, which measures trend momentum, was actually
Yeah.
increasing for the bulls, but it never really got anywhere. So to
Right.
me, that divergence between price not making highs and the momentum getting stronger is also a sign that, hey, we're not done yet. But it never really pushed above that threshold to me. So jumping that threshold is what I'm looking for.
I
And
see.
if you look at anything in life, any kind of threshold is always anxiety driven, like maybe
Yeah.
turning 18 or going to college for the first time or something. You're jumping these life thresholds. It's that same
Yes.
kind of thing that I'm trying to measure from a psychology basis. That when's that psychology or that social mood? When's that going to change? And that's what I'm trying to measure here. And so far, it hasn't changed, at least on the 4 hour. So we're kind of waiting to kick above that level there. So nothing fun really on the 4 hour, but just kind of showing you what I'm looking at, and maybe we can get some pump and get this thing going. But when you flip over to the daily, it's also another range that I'm looking at. So when you look at we've been in the bear zone here on the daily since here. The shallow fib is at 17,484 on the daily,
Hmm.
which is really close to this one. I mean, it's pretty much the same area that we need to break. So I'm thinking once this 4 hour breaks to the upside, we get the daily going into the bull zone. But just like on the 4 hour, that shallow fib is at 17,484 at the moment. If this goes into the bull zone, I need 3 daily settlements above that 17,484 to
Right.
make my signal. But right now, everything kind of worked. It went down, hit that key support down here on an extension, just the very tip of it, right at the top here, key support in this range. I was thinking I have another order in at 14.9 in case it gets kind of ugly down at the bottom of this fib extension that I'm looking at on the daily based on some of this other stuff that I've looked at in the past. Um, but right now, this little bit of a divergence here. Maybe it helped us a little bit. Still bearish on the ADX, still in the bear zone. So I'm not really. I guess I'm what a lot of people probably say cautiously optimistic that there
Yeah.
is that possibility that the low could be in, and then we're going to start kind of going sideways to higher, and then all of a sudden we're going to start to get a little bit of buying interest behind it. But until then, I'm still looking at the daily with a shallow fib level. There just hasn't broken into that bull zone yet. So the 4 hour and the daily kind of showing us nothing at the moment,
You're
but
kind of looking at like the 4 hour and the daily is they're kind of in concert with each other. The 4 hour will then lead into the daily, and that
yep,
17.5 pivot is kind of the big one where things start to actually change in favor of that trend being followed by momentum.
yeah, exactly,
Got it.
exactly.
Okay.
And then also I got an Elliott wave line in the sand down here. There's a pattern that I've been following for oh my gosh for a long ass time. And if this takes it out this low, this 13,868, there was a previous high back
Mhm.
there, based
Yes.
on wave count. If this correction from the highs gets underneath that, um, my whole count goes to scrap, and I gotta hit the drawing board. But
So that's kind
but
of like the doomsday.
yeah,
Uh,
yeah.
okay, I see.
Yeah. If we take that out, then I'd be concerned for 10K, maybe even under 10K. But
Right.
but that's another story, and let's not talk about that because that's shitty. And unless you want, unless of course you're waiting for those prices, and there's probably a lot of people that are, and then that's fine. But
It
if this
certainly
break,
seems to me like that sentiment wise. I mean, I don't know what your sort of own tunnel looks like as well, or echo chamber, but I know in my own echo chamber, there definitely seems to be no real talk of Bitcoin putting in a low here. There seems to be only talk of how much lower are we going to go? Is it going to be
yeah,
12,000? Is it going to be 9,000? Is it going to be 3,000? So on and so forth.
yeah, I'm hearing a lot of 12K that people are waiting
Yeah.
for, but I mean, according to my stuff, if we get to 12K, it's breaking my pattern, and that to me if it gets to 12K, it's probably going to go a lot lower than 12K.
I'm 100% in agreement with you.
But we'll see.
100% in agreement.
But we'll see. We're still holding there, so I want to stay a little optimistic. That's where that cautiously optimistic comes into play. But let's move over to the weekly. I got a pattern here I wanted to show. Um, that there's a lot on here, but let me kind of explain it real quick. But on my zones here, we're getting a little bit of a bullish divergence. On the daily, we're getting an ending diagonal on here on this wedge. Um, but what I'm looking at is I went back and looked at some trend line breaks and some timing on some of my fib stuff. When you look at this trend line here and then the breakdown, you take the highest point above the trend line and take that distance. And typically, a lot of times you can use that as a measurement, as a target. And as you can see, you take the same rate of change from the time it broke and down there, and you can see it made the target eventually, and worked from there. And then if you go the other way, the break to the trend line this way, you take that same measurement this way, and it made the target this way here on this one. It broke and then it hit the target, and so far we've hit right where we needed to be on this target. So to me,
this
all
is
these
incredibly interesting, by the way.
Yeah,
I've never seen someone do it like this, but it intuitively makes a lot of sense, actually.
Yeah, there's some fibs behind it, but I'm just showing you the final story. You know what I mean?
Well, I understand that the way that you use fibs and the way that you use trend lines is not so much to like draw a fucking line, but it's more or less to kind of get some sort of a gauge on the actual severity of emotions that go alongside that.
Yes,
that's kind of the way that I understand it, and it makes a lot of intuitive sense to me.
Yeah, I mean,
more importantly, it works.
Yeah, exactly. I mean, yeah, exactly. It's just some way of trying to quantify psychology, which is really tough to do. But that's my whole goal, is to try and measure that. But right now, what I'm seeing is I put in this sine wave just to kind of show you a kind of a swing of things going. So at this point, there was a break. So when it went down, came back up and retested. That's a key signal that
just while you're there, it was that specific one, the $6,000 to $12,000 bounce.
This was a break at like 11K. So yeah, we broke the trend from the highs.
Okay, so that makes sense. It was a major low, even though it's kind of hard to tell on that chart. It's a 2x move.
Yes, yeah, exactly. So and then we went up here, and then once that broke, we went into the downtrend. So as we swung, there was a minor trend change right in here. At this point, not a great one, but it was also at this sign here. So as this kind of swings, it comes at this point right here. So you draw this trend line in here, and that swing, it breaks the trend, and then it retests, and then we went off to the races. And then we swing up to the other one, and then this trend line breaks and then retests at this point, which kind of measures in with my bear zone on the weekly here. And then we went down. So if we take this swing, now this is where it gets kind of interesting, and of course this is just a guideline. I'm not going to put all my house and savings on it, but
I'm already spending it.
Exactly. As this swings this way, and if this is the low, and right now I'm still leaning that this is, because we got the trend line break, it all matches up, at least on this port. As this swings up, the break of this trend line should come in around this sine wave at around April of 2023, which right now the trend line break would be up around 30K or so, 33, 34, somewhere right around in there. And if that breaks, then the measurement, just like these past measurements, would put us up at this extension around 83K. Not saying that would go from 30 to 80 in a day. It's going to take. It's kind of got to do the swings, you know. So it's
right.
So what it does is it kind of works into. If you get into April of 24, is when the halving is. So if you start to swing, you break this. You know, maybe you go a little bit of sideways, and then it starts cranking to the upside. As it swings into that next high possibility. But right now the timing is what I'm looking at, is the April for a break of this trend line based on these patterns. And the other thing was the fib extension off of this was in this 12.1 to 17.8. There's a lot of other things inside this zone, and that's where I got my 16.7 buy based on a lot of the other patterns that I showed, I think, a couple of shows ago. But a lot of people are looking at the bottom of the extension of 12.1. But to me, if it gets down to the bottom of this extension, it breaks this low and it brings a whole bunch of mess into things. But everything that's happening right now is within this zone that I like to see as a reversal, based off of this low right here, making a new low, and then it extended down into here, and now it's hitting a bunch of support where it should, which is a good sign. So let's look at this, and then if I pop over to this, this is the weekly, and I was talking about the halving that comes in April or so of 24, I believe, somewhere right around in there. But what I was looking at was these different halvings. And if you kind of break this down of when we went up and then came back down and made a low before the halving, and then it went up and broke, and then we had a low here and went up and broke, and now the low here. So when you break this, if you look at kind of the ratio going the other direction, this zone right here is like your 61.8%, and this is your 38.2. It's not exact, but it's pretty daggone close. And then the same thing here, 124 bars to 75. So basically from the low to the halving is about 78 bars. This one was 75. This one's 72, which the low comes in there. So if you look at it from an aspect of ratios, this is the larger ratio, and then this breaks. So if the 61.8% breaks, which I mean, if you look at it, you got to turn your head around. But the basically this is breaking to say that the low is in, and then you work your way to the halving, and then it breaks to the upside.
Okay.
So in this case, the low would be in, and then it would work its way to the upside, and then have the halving and get higher highs. So one thing I'm looking at is if you look at the 72 bars here, and I flip over to that monthly chart that I was looking at from before. On a monthly chart, it's 17 bars. So if you go back exactly from the April of when the halving is to where 17 bars is, which is the same amount as the weekly chart, it's on that month that's the low that we've seen so far. So when you look at it from this aspect, we've hit the low, possibly, and then looking at the long term. One thing I was looking for was a possible low in September, which was this one, and I was kind of looking at that. And of course, it didn't happen. So that was a red flag that, hey, maybe we're going lower. And so far we have, and then we've dipped down into that zone that I was looking for, that I was hoping that we would see in April. But there was a lot of other things for November and December to possibly make a low on other patterns. But I was not like back here on this low. I was like crazy confident. This one I wasn't as confident, just because back here I was calling this June low like months in advance. I don't know. I'm sure we talked about it.
Yes.
And it hit just perfect. But I was slamming it home, and I was like, "We're go." I was pumping it. But this time I wasn't pumping it, and the reason was, when you look at it from a fib extent, like fib numbers, this one right here is more important as a low, as a significant low, like these are, uh, when you're talking December of next year. So basically, a year from now, is when a really main low could come in. So what I'm looking at is, if you take this period right here, thinking that the low is in this month, and we're starting to kick up a little bit right here, we're within this zone. It's saying, hey, maybe the low's in, we're starting to work up. But if you take it from a break of when that April time frame is right now, if the low's in, we'll work our way up to here, which is the 38.2% level of going back this direction. So this should be major resistance is that 35.9. So basically, if we went up to over the next couple of months, or into February, February could give us a 35, and then that April, or basically, it's hard to do it on a monthly here, but if it kind of comes up, hits that 35 and comes back down, and then it works its way back up, the trend line that we were looking at should break April. April should be right around in here. It should break that trend line to the upside, based on this timing, back here on this swing. So if we get this swing, maybe we work up, come back down, and then we break up this way through that April time period. And it would look something similar to this, and it could be somewhat of a wave one. And then this wave two right here goes into that possible major low possibility, which it could be something along the lines of breaks out to the 48 and then works its way down. Maybe it goes all the way back down, to 28 again, on this correction, and then starts working its way up. But this will be a major low after a possible high. Now, this is a very aggressive type of look at the moment, but if you look at it from the timing, and if we break that April to the upside, then it wouldn't surprise me, because we'd get that support and resistance flip on that major trend line, and then work our way up, and then come back, make a low, and then we make a run. So this would be kind of a 1, a 2, and then we have this wave 3 that would push us up into the new up toward the new highs, or possibly retesting the highs. Then have a wave 4 and then a wave 5 to get up to that 80K over time, like I was talking about on here. Once this breaks and maybe we go up to that 48, come back down and retest, and then work our way up to 80 over time. If this happens, I mean, this is just something I'm following. Of course, my safeguards are, if we break some of these support, with the line in the sand, of course, is going to be a big deal for me. But the main thing I was looking at was is there a possibility of getting this swing on here of getting the low end and then working our way up and then swinging and breaking this trend line to the upside? I don't know, but it's something I'm really definitely going to kind of keep an eye on. And if that happens, then that would be perfect. Timing would work. Elliott wave would work. Everything on the fib levels are working. So I like on how all that is kind of coming together. So real quick, on the other side of things is the dollar, and not that it's going to be a perfect correlation all the time, or
Right.
or inverse correlation all the time, but it's something I definitely like to keep an eye on. So when you look at the dollar on my 4 hour, we've been in the bear zone back here. So this broke into the bear. I had a couple trades in here already. It came down, hit some shallow fit or some targets, came back up, sold, came back down, hit the second target, and now I've resold again at the shallow fib because it came up, hit the shallow fib. We're still in the bear zone, kind of got a hidden bearish divergence in here, and working our way back down to the downside. So right now I'm short at the shallow fib with the next target coming down here at 101.89 to 102.67 possibly in the zone down here. But this is my next target. So if this is going to continue bear zone and maybe we get some momentum for the bears and this breaks to the downside, maybe the move on the dollar to the downside would bring money flow into some of the other assets like Bitcoin and some of the other ones. But we'll see. But right now that's the 4 hour. So and of course my shallow fib is short. If it starts to break back up, then I'll get out and go the other way. But when you look at it from a weekly on the dollar, we had this bull zone, then it came back down and it just broke the bear zone this week or last week. But my previous shallow fib, it's on its third time, which I need 3 consecutive periods, which I need 3 weeks underneath the previous shallow fib. And so far this week is still hovering down here. So if that happens, then this would go into a sell signal on this one to give us that target of 101.44. And then maybe even a second target down here if it gets really crazy to the downside. So this weekly break in the bear zone, not a good sign for the dollar. Not to say that this is perfect, but it's definitely a signal for me that I'm comfortable holding this short if this wants to kind of continue to the downside. No guarantees, but this dollar could come right back up really fast. But right now I like the way it's acting, and from a long-term perspective, it could be breaking down. So if this does happen, then I feel a lot more confident that this scenario coming up off of this would happen. And that way on the monthly chart, we get that run to 35K by February. That's what I'm kind of looking at on some of this. So sorry to ramble. That
was amazing. That was fucking perfect. That was absolutely fucking perfect, man. So I have I don't want to go too. Yep, go ahead.
No, I said any questions, comments.
Oh, I said I don't want to hold you for too long because U.S. market's going to be open up relatively soon here.
Yep.
But okay, so a few things, man. My mind is fucking running right now. All right, so that was absolutely beautiful, by the way. I learned a few new things. But most importantly, so one of the things that I think the average viewer is kind of thinking right here is, okay, Bitcoin hit your target. PA doesn't work. Yes, let me know something new.
I'm sorry. Go ahead. I'm sorry.
Okay, so first things first. So when you say that Bitcoin hit your $16,500 target, and you're kind of aligning with this major timing on the monthly as well, around these areas, and close enough is close enough realistically. I mean, look, if it said fucking September and we come down in November, basically, look, that's close enough as far as I'm concerned. But
it's a process. It's a process.
Yes, 100%. So when you say that you you did your long-term buys here, first, how much, if, and you don't need to be super specific, but just out of curiosity, how much of your actual total equity are you going in at, at those prices? Like, are you doing, you're probably not doing everything, but I'm just curious, like what sort of percentage of your equity do you actually put into these sort of more long-term plays?
Yeah, on this one, I had two buckets that I was using
Okay.
because I broke once it hit that 69K, and it came down. I think my threshold hit around 50ish or so, and that's when I got out of everything, um,
Mhm.
and took that dry powder and waited. And then that's that next low I was waiting for was 16.7, which
So this
finally
was
hit.
premeditated so fucking far in advance that
Yeah,
it's
yeah. These are the
okay.
major swings. These are, like, you know, not that I'm trying to call the top or the bottom. It's
Mhm.
that's why I got out at 50 and not at 60,
Right.
because it took a little time to
Yeah.
say, hey, now it's time to switch around that whole primary trend.
Right. Right.
And that's that dry powder that I was holding, waiting for, some decent buys. Now, I didn't know we were going to get to 16.7. We could have went to 28 and then reversed,
Mhm.
and who knows what. But based on a lot of the different timings that I've done with you before, basically the same kind of timings I'm looking at now, um, is is that process of the reversal. So what I did was I took two buckets, 16.7 and 14.9 were my two big
Mhm.
numbers. And I would say I did I've done a little bit more. I'm trying to think of like on a percentage basis. I probably would say I put about 30 to 40% of my bucket into that 16.7, which is a pretty big amount,
Very interesting.
and a,
Yeah.
and
Yeah.
a pretty risky move. But I got to go with I mean, this is not
Yeah.
financial advice. This is what I've done with my money and my positions,
Mhm.
and I'm willing to take that risk. But if it comes back down, I probably would be doing another 20 to 30% at 14.9, and getting that bottoming process in. Now, of course, if this line in the sand breaks out, I'll take the loss. I mean that's how we learn, right?
Mhm.
And say, but that's what I use the waves for, and a lot of other stop loss possibilities on my different thresholds. That um, it's good to have a system that reduces your loss and helps your gains, right? And if this happens and it breaks that low, then I take the loss, and then we kind of back up the truck somewhere else. But right
Right.
now, I'd say if the 14.9 hits, um, that bucket of dry powder that I've had waiting for this low, I probably would have about 60 to 70% of that money's sitting in there, waiting for that next move to the upside.
Very interesting.
Which
I'm
is a
not
pretty good percentage.
yeah. I'm usually not as long-term minded as I think most people and yourself included. But I kind of did something relatively similar, not at your exact price. You obviously have better prices, but I went about 25 to 30% in, about 25% in around 20,000 bucks, and then
Mhm.
another 15 to 20% in at around 16 to 16.5 or so. So I do
Okay.
like that we're kind of around those same areas, and they're long-term plays, obviously. If it works
Oh
out, it
yeah,
works
yeah,
out.
yeah,
If it doesn't, it doesn't, obviously.
yeah. I'm waiting for my 4 hour my daily to do more swing trading in the short
Right.
term. Yep.
Exactly, exactly.
Yep.
Completely divorced from the short term, obviously.
Correct.
And
Correct.
I'm going to guess here that, these are multi-year, if not maybe even multi-decade plays that you're looking at. This isn't
Correct.
something, right?
Yeah,
Okay,
my
okay.
16.7 buy is, hopefully that we're on a bull run from now,
Hmm.
setting a low all the way into the next halving and working up from there. So mid 2024 might be a possibility of
Yeah.
taking some of that profit, um,
So do you
based on
feel
patterns, of course.
Yes.
Yeah.
So it seems to me that you're almost kind of preparing for something similar to, like, let's say early 2019, when Bitcoin went on that run from about, $3,000 lows to 14,000 bucks. Maybe not exactly that high, but you're looking for, a like kind of like a mini bull run here within an overall secular bear market that'll probably get stopped, you know, maybe at best like mid to deep 30s,
Mhm.
maybe a little bit earlier than that as well, but somewhere around there is kind of where you're looking at. Is that about right?
Yep, yep, that makes perfect sense.
That's
Um,
very
and
interesting.
and it's very like it's not exact on the patterns, but when you look back at when we were at that low of 3K and we were moving up to 4K, and everyone was still saying, "Hey, we need to buy at 1,000." Or wait for 1,000, because everybody was saying, "Oh, it could go to 1,000 and go to 1,000." I'm getting a lot of the same bottoming process signals that I've gotten back there. Not to say that we can't go lower. I mean, I still got an order in at 14.9, which is lower than we've seen. But back then, that 31K or 3.1K, I can't remember exactly the price, but when it came down there, I did a lot of my buying and backing up the truck at 4,500. Because my system was breaking and telling me to do that, just kind of the same way that we're kind of seeing the swings happening here. Not to say that this is perfect, but it's that same kind of bottoming process. So I was a little bit more comfortable going in and putting some money towards 16.7, putting some money toward 14.9. If it breaks down underneath that 13.5 or whatever it needs to do, I'll take my lickings and move on. But if not, then I'm positioned really well for that next motive move to the upside. That's what I'm kind of looking at.
Right.
Yeah.
Okay, that's very interesting. Also, it does align with something a little bit more on the short term compared to what you're looking at than myself. Because I've been looking at, it's a lot more likely based off of a couple of the statistical models that I'm looking at that
The
Bitcoin's going to.
the accumulation distribution that you've been showing.
That would be one, and then there's a couple of other big volatility signals that I'm looking at as well that do suggest up is more likely than down. Right? It essentially says that, hey, we have a major low in as of right now. It might come back down to test around those lows. That's completely fine, but it's very likely that Bitcoin trades into the 20s before potentially going lower if it is going to go lower. My model doesn't really account for the same things as yours does. Yours is a lot more long term and a lot more timing oriented, which is why I love talking to you about this, because it's so fucking unique in that aspect. But one of the things that I keep on coming back to, and just I'm curious if this is something that you pay attention to, is just the sentiment right now. The sentiment is not necessarily, I wouldn't say it's bad. I mean, it's horrid, obviously, but more than anything, people are becoming apathetic to crypto, or apathetic to Bitcoin, or apathetic to markets in general. And to me, that's a sign that we're actually maybe a little more mature within this bear market than I think a lot of people are considering, simply because you expect people to first get angry. Obviously, we know when they lose money, but after they, lose enough money, they, that emotion subsides and they probably just leave. And that's kind of what we're getting right now. Things are really fucking boring, as you've seen on the full hour. Not too many trades going on there.
Yeah, exactly.
And I'm just curious if that's something that you pay attention to. Is that something that you have a way of tracking? Does that mean anything to you, basically?
Yeah. I mean, everyone sees that psychology chart they show, right?
Right. Yes.
Where are we?
Yeah, the old market psychology.
Yeah, exactly.
It's that simple.
So if you put my screen back up, this is just
Yep.
something that I have here.
There we go.
Basically, my whole fib theory is trying to measure the social mood changes. So what you're talking about is that's what my whole mindset is trying to measure when those changes are happening. So of course you get into this, these waves that we kind of look at, and you get into that increasing mood, your optimism, blah blah blah. And then you get up to that peak positive mood, which is euphoria, blah blah blah. And this is where a lot of people buy, which is mind-boggling to me, but it just happens. But as long as that happens, fear and greed in the world, I got a job, right? So then you get into this decreasing mood here, and we're in these kind of swings here, and we're coming back down on this swing, and this is that trend line that we kind of talked about. This is on the weekly, but it breaks, blah blah blah. But we're getting into this trough, which is a process. It's not like I'm trying to say the low is going to be 11.752. I'm not trying to nail it. I'm trying to figure out where that psychology switch is going to be. So I'm kind of in agreement with you of, yes, the whole sector sucks right now. Like, you talk to somebody, it's like, yeah, this sucks, blah blah blah. But if you really look at it from a break point of looking at Bitcoin versus crypto and looking at what Bitcoin is there and what it was created for in the first place, I feel like you'll get a lot more buying interest coming into something that has a lot more long-term potential versus some of these other things. Not to say that anything else can't go up, but I'm looking at it from that mindset. as Bitcoin's being the leader of the group. So the social mood to me needs to kind of go there first. Just by what I'm looking at. So so right now we're in the trough of this, and maybe we start bringing and start increasing that mood back to some of that hope or some of that happiness and some of that optimism. I don't see it yet, but that's why it's a process. And maybe what'll happen is some of that optimism will start to come in, and some of that buying interest will come in, and then get us back into this. Breaks into the increasing mood, breaks us into this, and then we trough, up into that area. So yeah, I kind of look at it from that aspect. So I'm not really looking at it from the whole psychology chart of where we are in anger and all that. I'm more trying to see where are we in the mood based on the swings that we're seeing based on my fib model. And right now we should be kind of troughing into that negative mood, fear, depression, mistrust. I mean, that's basically what we have right now. So to me, that should be the bottom, because that mistrust gets to such an extreme, and with the mistrust that we've been seeing and the social mood that we've been seeing, and it hasn't hit 10K yet, is a good sign.
Dude, that's exactly what I was thinking the other day, man. It's like, okay, if you're just going off of, what's actually happened, we've seen a black swan with FTX. We've seen historically low volatility. We've seen layoffs in many different many companies at this point. What else have we seen? We've seen record this, record that, just as far as all the headlines go. And when, like, one of the things that my mentor really taught me, that really tried to ingrain in my mind, is that when you see that coming in as like a euphoria or a doomium type thing, those are typically major highs and major lows. And this really does feel, in that case, at least, maybe it's not a macro low, but it's probably a major low. Like what what more things are they gonna throw at this fucking asset in order to I mean, it's just, I don't know, it's running out of juice, in my opinion. Now I'm curious, when you're looking at traditional market, or you still look at traditional markets, I'm sure of that. Yeah.
Yep.
Okay. So
I trade mainly like a SPY index.
Okay, right on. Okay.
I help people with individual stocks.
Dude, how the fuck do you trade SPY though, man? With all of those like daily expirations, that thing moves like molasses. It's crazy.
Oh, it's been pretty profitable.
Nice, man.
It's actually been pretty good.
Do you trade options with it, or just straight up spot?
Mostly straight up spot.
Okay.
I haven't really done much options on that.
I see. I would think options would be a fucking nightmare on that.
Yeah, I can never figure that one out, to be honest.
Yeah.
I haven't traded options a lot in the last few years, just from a trading aspect. I've always been doing it as a hedge, buying puts against,
right. Yes.
Preserving my capital versus, selling.
Well, you're either going to do hedge plays with them, or you're going to do vol plays with them. I mean, there's not really much else to do.
Yeah,
unless you're like fucking general public, just using them as, basically lottery tickets, I guess. But worked out quite well for the Robinhood crowd, I guess. But yeah, man, I'm just I know we're getting a little bit over time here, and I'll let you go in a second. But I'm just curious. We don't have to go into charts, but just as like a general sort of just as a statement, how would you sort of, or what would you say we're essentially looking at right now in traditional markets? The major Borises, like the SPYs, Indus, these sort of thing.
Actually, I'm not going to pull the chart up, but I do want to look at it.
Okay.
See where we're at, because I haven't looked at it in a couple of days, because I'm not in a position at the moment.
Right. So you don't pay like close attention to it.
No, just when it hits
I see.
But let me see where we're at on it here. I haven't looked at it in a couple of days. Let it pull up. There we go. Actually, why is this not moving?
Trading View, please respond.
There we go. Right now we went into the bear zone right here. More. I traded a bunch of stuff, and then it hit this extension right here and held. That was my final out. I haven't done anything since then. I've basically been waiting for either the next target down here. If it got to 38.10, I would buy,
Yeah.
if it broke down, or if it goes back into the bull zone, which it has not yet. It's still in the bear zone. I typically would probably sell the top here based on my threshold off this previous
Yes.
high. I didn't. I was just kind of holding out at the moment. I do want to see a break of the bull zone here to get us back going. But right now we're still in the bear zone with a downside possibility at the moment, is what I'm kind of looking at it on my stuff. But I haven't, I haven't done anything recently.
Gotcha.
I did a bunch from this point all the way down. I know, like you said, molasses, but it's actually worked pretty well on all of this. Um, so what was your question again? I haven't had enough.
I was just curious of your general outlook on SPY. Yeah. But maybe it'd be better just to just kind of close this on Bitcoin, actually, in the sense that if we're going to kind of wrap up your model on the higher term timeframes here, you're essentially looking at if this plays out, obviously, a major, maybe even a macro low, kind of around this time. We'd expect November, December, maybe even January. But you're essentially looking for things to start picking up into the beginning of 2023 and a rally potentially even as high as the deep 30s. Is that about right?
Yeah, I mean, that's why I said it was a little bit of aggressive kind of a look, but
Yeah, it definitely sounds like that right now. But
yeah, but
man,
it would be sometime in February would be a
right.
possible
Okay.
time to be hitting 30K.
Wow.
Um,
All right. Okay.
not to say that'll happen, but
Mhm. Of
if
course,
it goes
no
up,
one's going to hold you to this, by the way. I mean, like,
no,
Jesus
no, no, no,
Christ. Don't
no,
be
I get
ridiculous.
no, I get that. Um,
Okay.
uh, but it's also something to kind of keep an eye on, because
Hmm.
if those long term patterns are going to hold, there's going to be
Right.
these certain areas of really key buying, really
Right.
key selling, and if it ends up breaking this, which it hasn't yet, but if the daily
Yes.
breaks and some of these others, and we start getting momentum,
Yes.
a pop to at least the previous low of that 28.8 could
Yeah.
be a possible touch. So,
Okay.
and it could actually go to 28.8 and come back down and then work its way back up after that. And still,
Got it.
and what I'm looking for is that April break of that trend line, which is just
Mhm.
in those low 30s. So if we get up into that 30K area, break back, and then work our way back up, maybe it only gets into the upper 20s and then comes back, and then later on in April
Right.
it breaks the low 30s. So I'm kind of, so I guess it the earliest it would be February,
Yeah.
but then the latest it could be is April. So somewhere around that
Okay.
30K area of a possible break. It is
Right.
aggressive. Don't hold me to it. But if it happens, we're in
Well,
the money,
it's
right?
just very interesting because from the way that I understand, that essentially validates the model, and then, well, we can extrapolate from there, which would be extremely useful, obviously.
Yeah, yeah.
Um,
It validates my personal model that I
mhm,
follow with all my stuff. It also it follows Elliott wave patterns that probably a lot of people are
mhm,
looking at. A lot of bottoming issues from a lot of different things. Accumulation, distribution that you're looking at is sort of given a bottoming look. There's
mhm.
other statistical things that are also showing there. So that confluence of some of the statistical stuff, some of the some of my stuff when it comes to fib levels,
Right.
some Elliott wave patterns, uh, um, who knows what Wyckoff. Just there's a lot of different things
Right.
that are happening. So that confluence to me is what I like it to see.
Mhm.
and and of course, like you said, it's no guarantee. It's a market. There's no absolutes in markets except for one, and that is that we will all lose eventually on some trade. You cannot get 100% trade,
Yep.
right? So
Oh yeah.
that's the only guarantee in markets, is that you will lose once or twice in your life. But um,
Goddamn right.
but other than that, I like the confluence that's happening, and to
Mhm.
me, that gives me a little bit more comfort to put a little bit more risk in the game. That's what it kind of comes down to.
Awesome, man.
Yep,
Well, it's been a pleasure to have you on. As always,
absolutely.
all of Swanny's links will be in the description below. I believe you're probably most active on Twitter, TradingView, and then you have your own website.
Yep.
That'll be again all
Yep.
laid out there for you. I
Yep.
strongly recommend to check out Swanny. He's one of the few guys that I actually speak with often, And as you can see, has a very unique and more importantly, an experience-based system that he's built all of these sort of setups around, which I think is incredibly valuable. So thanks again for coming on, man. It's been an absolute pleasure, and we'll have you on again soon.
Oh, thanks, Krown. It's always an enjoyable time talking to you.
Alrighty, brother. Take care.